14 March, Tuesday, MAO with Kel. Once again, I really think Jim Cramer deserves an Oscar. Not the real Oscar, but something of similar, alright? He's so good. Now, I've been looking at what he has been calling for the last few weeks, and I cannot imagine that if someone is really watching CNBC and follow exactly what he say, oh gosh, you cannot imagine how much your losses will be right now. And this is not the first time, it's not the second time, it's so many times, and now there's an ETF that's been created for him so that you can go against his call. This is incredible. I'll tell you more in detail. But today, all eyes on Federal Reserve because tonight CPI data is coming up. And the number shows that it should be a lower number. Okay, but I just have this nagging feeling that it may not be 6.0. I got this feeling that it could be a 6.1 or 6.2 and the market won't like it. Let me tell you more in detail shortly. Let's go, guys. Now, the thing is this, before we start the MAO, I'd like to look out for this person, KK Chong. You are one of the winners for tomorrow's lunch, and we can't seem to find you. So we left a message on your message here. So please do us a favor, contact us ASAP right now so that we can contact you to invite you for the lunch tomorrow, okay? Alright, the rest of the people have already confirmed, and thank you so much again. So guys, leave a comment for today's video on Jim Cramer. Okay, today, if you listen to me right now, leave a comment on Jim Cramer, what you think about his calls, and leave it inside the comment box. If you do that, you will get a chance to lunch with me next week. Okay, next week. All right, next week. Okay, so do me a favor, put your comment on Jim Cramer. All right, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now, before we do the next thing again, thank you guys. We have more than 88 people have registered for this coming Saturday. My preview is via Zoom. Now, I'll go in depth with a lot of stuff, okay? And this event, this Zoom, right, is from 9:30 a.m. to 11:30 a.m. It's 2 hours only, and it's limited to 120 registered packs, okay? And now we have 88. Thank you so much, guys. Now, what we'll be highlighting? Well, first of all, I'll explain to you how low can the Dow possibly go. Now, what's a mathematic formula, and what's a rationale formula, and what is the Wall Street looking at? Okay, I'll give you a few. And of course, is it time to buy gold and crude oil? Well, in my opinion, we have called for buy on gold, and we have profited from that, and I think that there's more to come. Alright, so I'll tell you more. And of course, crude oil price came off recently, back down to $74. I think it's a good time to look at it again at about 71, 72 level. Alright, and when can we go long? This is the ultimate question that people have been asking. We've been calling for sell for the last few months, in fact, from last year instead, okay? And we'll be pretty decently alright. When is the time to go long? I'll tell you during the preview. And I'll tell you which market we're looking at, and hopefully you'll join us together, okay? Alright. Now, the thing is this, why are our students doing well? Well, because we have something like this. Take a look, guys. This is my indicator. This indicator is sole proprietorship, which means no one has it in the world except myself, alright? And of course, I share with my students. Now, this indicator called KSI is called Cal Sentiment Indicator. And you can see right over here itself, the indicator is actually upticking, okay? Now, the thing is this, when the market goes up, alright, normal indicators like stochastic, Bollinger Bands, MACD goes up, that is very normal. When price comes down, of course, MACDs, RSI, stochastic points down, that is also very normal. But look at my KSI. My KSI indicator, the KSI was moving upwards, but take a look, the market was going up at the same time. Now, take a look. When the Hang Seng was plunging back here, my KSI has already turned red, okay? So you can see that it was quite nicely in conjunct with that. But during this period of time, I was warning everybody that be careful. Now, back then itself, right, I know that some local trainers are calling for buying in China stock, Hong Kong stocks, and anything that is doing with Chinese, the ADRs and stuff like that. But I was expressing my concern because I know what will happen soon. Because when my KSI is red in color while the market is going up, it's never a good sign. And once the market loses, okay, loses a technical point, which I will divulge only in my course, this is the selling point. And usually it will come back down to where it started. And truth be told, within 3 working days, the market slammed down, and now it's slightly going lower for Hang Seng. I believe that Hang Seng is going to go down to 18,984 by tonight or latest tomorrow. And in fact itself, right, we may even get to see 18,699 by this week, okay? And the scary part is that if this thing prolonged further for SVB all the way and there's a repercussion, Guys, Hang Seng, within 2 weeks, we can see 18,191 because that's a fresh chocolate bar, okay? So this is something that you must understand that might be happening. Nothing 100%, okay? The market may rebound, but at least for now, that's how I see it. And that's the reason why you can see right now, my students are very happy with their result because they actually show them, okay? Willingly to show them for me to showcase in the market. And you can see this one right here, right now. This is from Alvin. Okay, you can see that. Alvin had just made $946 from trading the Hang Seng, and he went long initially, then he turned to short and he made $946. And of course, this morning we did some more Hang Seng trade live and we made about probably $340 that could pay for lunch tomorrow easily. Alright guys, once again, this is real stuff. You can see it's happening, and if you if you think my indicator is interesting, join us, okay? Because you really think that if they say the common indicator is not usable, it's expected to know. Do join and try out something different, yeah? Okay, let's recap what happened last night. Now, last night the Dow Jones down 90 points, but the Nasdaq was up by 92 points. So that means that the Dow is down, but the Nasdaq is going up. Okay, interesting. Now, why is that so? Because of the banks, obviously. Now, last night, Wells Fargo, oh gosh, take a look. Wells Fargo down by 7.13%, and that bring the market cap back down to below $150 billion, okay? So why? Because Wells Fargo is one of the highlighted banks that is actually holding a lot of assets on the bond market, and of course, we all know that that's the reason why SVB went down. I'll tell you more in detail. So because of that, right, the Dow Jones has slid for the 5th straight day. Now, of course, would it be a possibility for the market to rebound in the near term? Well, a technical rebound is kind of expected, yeah? Okay? So the thing is this, is because there's a plan to backstop the depositors in Silicon Valley Bank. Now that is a good thing, but do note that is going to be a minority. A lot of money is placed in by the people who put in more than 250,000. So definitely, right, this is not going to be a nice event. And of course, when Joe Biden came in and said something else, I tell you this, he'll pay for it later on. I'll tell you more in detail, yeah? Okay, so the thing is this right now, people are looking at, is it possible to test the October low? Well, it is possible, but of course, people also think that it's a time to buy into the market because this is like a buying opportunity. Now, I really don't think so. Please understand this, guys. We are not even near below the 80% level. We are like 87.5%. So, which means that we are 12.5% from the all-time high. And you tell me that this is a good time to buy? I express my concern. Of course, you can say, but for the Nasdaq, it's down by 25%. Okay, Nasdaq's a little bit better, but for the banks, I don't think so, okay? And of course, the thing is this, the consumer price index now, people are actually looking at a rise of 0.4%. I'll have my own view. But the thing is this, you can see now how this whole bank thing works. You think about it, just last month, this time, one of the share like First Republic Bank, it was trading $130. Just 1 month later, it's $36. This is crazy, guys. This is really crazy. Now, people focus on one-day gain because after our result, right, because of the saving from the Federal Reserve, the FDIC, people think that this is time to buy, and because it's up by 15%, you think it's a good deal. But please understand this. The bank was $130 just last month. So within 1 month, the market collapsed down to $36. You can imagine the repercussion that's coming out very soon, okay? It won't be immediate. The repercussion will come in very, very soon, and this is going to be a big problem, all right? Now, of course, why I think Jim Cramer deserved the award. Now, first of all, I must congratulate Michelle Yeoh, all right? She's really one of the better actress for Asia, and I think that she deserved this Academy Award, and I'm pretty proud of her, even though she's a Malaysian, but it doesn't matter. She's still a Chinese. I think that great job, Michelle. But why I want to put her side by side with Jim Cramer, because you must understand, for this Academy Award, it's about acting, right? And I think that Jim Cramer is outstanding. Take a look. Now, he actually said that, right, FRC is a new focus, a very good bank, on the 10th of March, just a couple of days ago, where the bank share was at $130. And after he said that, oh my God, the share price plunged all the way to $27. He is a legend, I tell you that. Okay, not only that, Okay, this is the new Twitter that called the inverse Cramer. Okay, and the thing is this, he was the one who says that SVB was a buy at $320. He actually tells everyone on CNBC, guys, on CNBC. This is incredible. I mean, doesn't CNBC do anything? But of course, CNBC always have this disclaimer, very long wind, because they said, okay, this guy Jim Cramer got nothing to do with us. Yeah. Then why would you put him on your television then? Oh gosh. And of course, take a look right now, right? The thing is this, now they have an ETF for him, okay? This is an ETF called the Inverse Jim Cramer ETF tracker, and now it's up by 5% already, outperformed the market. Incredible. So isn't he better? I mean, he can not say lie. I think that he can act with a straight face. I think that is going to be the one. And of course, so many people believe in him. Isn't that wonderful? He should deserve something, guys. He should, really. I think he should, yeah? Alright, so the thing is this right now. Hold on a minute. I have a technical issue here. Okay, oh gosh, where am I? Okay, hold on a minute. There's some technical problem on my side right now. I can't find my mouse. Okay, found you. Okay, let's continue. So the thing is right now, Jim Cramer just a few hours ago says that, okay, many banks did poorly, but most of the big banks didn't. Don't confuse those, okay? Will the banking system be stronger today? Yes. And he says this, okay? It's time to believe in JP Morgan because it's a fortress. So immediately, right, you say, oh my God, RIP JP Morgan. So what do you think? Careful, careful, careful. Yeah. Okay. Another one is that they are talking about is Forbes. Okay. Apparently Forbes, right, the last few publication is right. They did talk about, we all know about this Elizabeth Holmes, who of course got herself in trouble. Then of course we have this Sam Bankman-Fried, also got some trouble. And of course the top bank, it was SVB, was on them, also got in trouble. So Forbes seemingly is also a very interesting magazine, financial magazine, and maybe they should be relooking at their finance publication once again. Yep. What do you think? Alright, so the FDIC prepared $25 billion for the depositors. Okay, that's a good sign. That's a good sign. But the thing is that that's because Signature Bank, SVB, and Silvergate, within 3 weeks itself, all collapsed. Okay, so that is not a good sign. And of course, Joe Biden claimed credits again, says that it's because of their fast, swifty act that prevented there be a financial calamity. Alright, he said that by coming up with FDIC, with Federal Reserve, they got enough money now to give the depositor. Okay, I buy you. Thank you. Right, so the thing is this. He says that investors in the bank will not be protected. That means that is like they knowingly took a risk, and when the risk didn't pay off, the investor lose money. That's how capitalism works. Wow, what a big word. Now, US is a capitalism, a democratic economy or country. And now you're telling me this, okay? So what do you think about the Wall Street guys? Would they be happy with him? No losses will be borne by the tax payers. I'm going to repeat that. No losses will be borne by the taxpayer. Instead, the money will come from the fees that the bank pay into the Deposit Insurance Fund, which is FDIC. Okay, then the last statement, wow. He says that there'll be new bank rules after this, and he cited that it's because of Donald Trump. Okay. What a way to run a campaign. Now the thing is this, okay, I want to stress this one here. When you actually said this, and this is how capitalism works, well, by then you must be very careful because your funding, your campaign will come from capitalism. So if you were to say this right now, right, just be careful for your campaign. Things may not go that well. Yep, just be careful. Now, of course, we know that SVB basically holds a majority ownership of the institution. Investors hold a majority of it, up to 98%. And of course, Vanguard is one of them. BlackRock in the third position, and the fifth position is actually JP Morgan Investment Management. So think about this. They are the top 5, top 10 owners of SVB. So obviously, it's all right. When you are telling me, not to give them, not to help me here, I'm not going to be very happy here as well. Think about it. Alright, so the thing is that, of course, the last few days, the KBW, which is the Nasdaq Bank Index, right, has came off really quite a fast figure. And you can see right now, the RSI is at 12. Wow, what a real low level. The last time we saw this in 2020 was back here itself. And of course, after a series of downside during the pandemic time, there was some rebound. Yeah, okay, there's some rebound. And of course, the last time the RSI hit there was some rebound. This something again, some rebound. So do I expect a rebound very soon? Yes, indeed. Well, based on what I'm seeing right now, right, we should be having a rebound from the bank share on pure technical. But in the long haul, I believe that we'll see 69. And that is the level we saw as a support back in 2020 October period, yeah? Now, because the point is this is recently the selling is done by all the smaller banks. The big bank share also came off a bit, but it's not as much, okay? So if later on, if the big bank get into trouble, if they do have trouble, then I can believe that this index will slice even lower. And that will actually create a problem, right? So I dig a bit deeper for you. I bring back all the way from 1993 for you and did a cross check. Well, we have the lowest point was at about 18, the highest point about 150. So the midpoint is about 65 to 67. And I believe that, right, this is the midpoint that you can look at it, because every time when the market comes to this midpoint, the market always rebound. So now it's at 81. I believe that there'll be some technical rebound first, but later on, it should be able to come back down to 65, and then that will be a good time to buy into the bank shares. Okay, guys? That's the reason why. Come for my preview. I'll tell you more in details. Okay? All right. Now, the thing is this. You can see right now, right, the US banks are sitting on unrealized losses. It's really mounting a real crazy bit. You don't see them talking about this last month, right? But they were holding this thing here itself. So now, because of this problem here, the Federal Reserve really need to think carefully. And because of that right now, right, incredibly, that no one now thinks that there'll be a 50 basis point. No one, okay? No one anymore. In fact, people are looking at only 25 and some even a rate cut. Oh gosh. Would there be a rate cut? No way, in my opinion. Would there be 25 basis point? Most likely. A 50 basis point, I'm actually rooting for this. But of course, I know now no one will talk about 50 basis point, because whoever said raise interest by 50 basis point is going to kill the market instantly. So no one will take that blame here. So no one will be doing that. So 25 basis point. So would that be good for the market? No, because that means that it will still continue to add more pain to the people, the banks who are holding all the bonds, right? So now the thing is this, guys. This is the crazy part here. This is basically, right, to tell you that the US bank to loan to deposit ratio, and the ratio itself, you can see SVB is at the lowest level. That's why it's so high risk. And of course, Wells Fargo is here, FRC is here, Key is here. So that's the reason why all these banks are right, may have an issue, alright? While JP Morgan is still alright. That is why this is a fortress. But guys, imagine if everybody get into trouble, what do you expect to see, right? So you can see from this chart right now, okay, you can see that FRC, the first public bank, alright, Western Alliance Bank, Bancorp, Key Corp, Zion, all these banks are actually down here. Okay, so that's why these companies now are down right now the last few days, because of this. So when you have very low deposit, and of course if there's going to be a bank run, your share price will be sold off, because you need to basically facilitate, and obviously you need the money. So that's why you can see now FRC down by 50%, and this Western down by 23%, and so forth. All these tells you that things are not really going well right now for the US banks. And of course, that since these banks are into trouble, that means that the money for the depositors' money, they have to run to put somewhere else, right? So apparently they run all the way to other banks like JP Morgan, which is now called a fortress, and Citibank. So Citigroup, yeah? So now the thing is this, now clients are saying that they learned their lesson. They're not only going to diversify their portfolio, they're going to diversify their bank. Gosh, when the last time you hear this, you diversify your banks? Well, it's happening right now. So, of course, now with more money going to JP Morgan and Citigroup, the good thing is that they can spend it, but the bad thing is that means that they have to pay more interest, right? So having more money may not be the best idea. So again, let's see how it develops, yeah? And now I will look at Nick. Okay, Nick is definitely a very important person for the Federal Reserve. He's a mouthpiece, and I've been watching his article and reading it. Now, the thing is this, I like this article. Take a look here. There's a saying that Federal Reserve raises interest rate until something breaks. A big surprise over the past year that nothing broke. But it's no more right now, because we know that SVB has broken down. Yep, okay. So the thing is this, now we have this happening, and based on history and historical pattern, when this thing happens, when some organization get into trouble, then of course the Federal Reserve can take this opportunity to basically halt interest rate and then cut interest rate. But if you remember all my past MAO videos, I tell you that when that happens, the stock market will come down even faster. So brace yourself, guys. So Goldman Sachs says that in the light of the recent stress in the banking system, we will no longer expect the FOMC to deliver the rate hike as of March 22nd. Okay, so Goldman Sachs say no rate hike. But JP Morgan say no. if indeed they use the right tool to address the financial contagion risk, okay, then they use the right tool to continue to address the inflation risk. So the thing is this, they're looking at 25 basis points. And honestly, I also think that they should, because they cannot stop now. If they stop, whatever they've been doing will not help. Yes, the banks are closing down, but like I say again, as long as the banks, it is the bank problem, because nothing to do with the US economy. So you cannot go and save the day and create a moral hazard here. So to me, a 25 basis point will likely be happening. And if you really do a 50 basis point, it'll be a stunner, but I don't think so it will happen. Yep. So let's just watch carefully. Nick usually before the data come out will talk again. So let's watch it about 5 p.m. plus. Let's see what happened. Yep. Okay, so you can see right now the 2-year yield has plunged because of the US dollar and the concerning factor of the cutting rates and stuff like that. The yield plunged back from 5% back to 4%. But you notice this, that is the base back then, and the market now is holding here. And I told you guys that I believe that, you know, the market will go back to 25 basis point increment. So if this has to go up again, then definitely it's alright. There should be more selling from the equity market. And the S&P 500 right now, you can see very clearly, it came down, hit the 38.2 beautifully at 38.008 last night and rebounded to 38.55. Okay, simple. 38.21 is a critical support level which the market have tested it and rebound. 3800 is the level that Michael Harnett mentioned, so the market was very close to 3800. So the thing is this, would there be a rebound right now? Well, there should be a classic rebound right here. But if the market breaks 38.21 tonight due to CPI data or more banks getting hurt, right, I believe that it will come straight down to here, which was the last support, and that's 35.10. Okay, and when that comes there, that will mean that the market breaks below the October low. And of course, when that happens, right, I believe that there will be a sudden huge amount of volatility over there. People are coming to buy, including myself, I think, and then there will be a rebound over there. So if you ask me, it seems that it's better to break down to this 35.10 so that we can get this out of chest and move on. Yeah, so that we can all make money together, right? If not, it's all right. If you're still stuck here in the limbo, most likely the market will not like it, and market hate uncertainty. So think about this, guys. What do you think? All right. So look at it right now, the CPI data. It seems that the numbers is looking downward. The CPI excluding food and energy seemingly is going down, and of course we have the remaining one is the Fed median inflation, and the service excluding energy is going higher. So expecting the number to go lower, all right, because we can see very clearly that we have the food, we have this medical, and this gold price and rental came out a little bit, but we all know that recently gold price went up, right? So maybe that will pull back the market again. So all I can say is this right now, that because of what's happening, this guy, DBFX, still believe that a recession is about to start. And I've been telling you guys this, I believe that the thing will come in, likely by August 2023, we will see recession. Yep. So tonight, the number is 6.4%. Last month, and the market looking at 6%. If you ask me, I'm looking at 6.2%. This is how I see it for myself. All right, guys. Another chance of this, if you don't leave a comment, right, you don't leave a comment for Jim Cramer, you can leave your expectation target for today's CPI figure. Leave a comment right now, put a number in, we'll use it again to form of a chance for you to win the lunch with me the following week. All right, sorry about that. We're having lunch tomorrow, so the next lunch date will be 2 weeks from now. Okay, but still you can put in your comments on Jim Cramer or this number. We'll put it as your form of your entry. Okay, all right. So you can see right now the numbers are coming down. If the market just go past and go up a bit, like say 6.2%, I kind of believe that the market will not like it. Yep, that's how I see it. Okay, all right. So this is the final chart. Take a look. This is the Dow Jones chart compared with the Nasdaq chart. Okay, now apparently in Dow Jones, right, back then in 1994-95, we saw the market coming down, right, quite badly. And if actually you put the Nasdaq and superimpose on it, you can see a little bit so-called accuracy there, not 100%, but it is possible. So if we continue like this, is it possible to actually see the Nasdaq coming down to as low as a certain figure like 4,000? I don't think so. Yeah, maybe 5,000. Okay. Anyway, this is just a YouTuber sharing it. I think it's pretty interesting, but I don't think so. The Nasdaq go to 5,000. I think Nasdaq to come down to 9,000. I think a lot of funds are coming and buy already. Okay. All right. That'll be all for now. I'll see you in on technical side, and I wish you all the best. This is Cal signing off.